What's up, guys? My name's Charlton, and I'm going to be trading and showing you guys how I trade for the next few months. So I'm going to be taking, as you can see, $100 account. I deposit $100, and I'm going to be trading until I can buy an M3. So that's probably going to be like $15,000 or $20,000. So it should take a few months. I'm hoping that I'll be done before next year, February. Should be. But so this account, I opened it on the 6th of July. It's currently the 8th of August, and I was just using it as a strategy tester. The broker's Forex Time, you can see it's a live account. But I wouldn't recommend that you use this broker. Use Pepperstone. Pepperstone's a great broker. I just opened a Forex Time account because I offer 2,000 to 1 leverage, and I wanted to see how quickly I could get to an M3. So I wouldn't recommend that you guys trade with anything over 1 to 100 leverage, because remember, the more leverage you have, the more money you can make, but also the faster you can blow your account, especially when you're learning. So I was using this to test strategies. So every time I would drop like below $100, like quite far, then I would just use my normal strategy to make up for the losses. So as you can see, like lots of small losses, and then I would just negate the losses with my normal strategy. So you can see here we came up to yesterday when I actually started this challenge, because it was non-farm payroll yesterday. And for you guys who don't know, non-farm payroll is the unemployment figures for America, and Canada also releases a non-farm, the unemployment figures on the same day at the same time, which is 2:30 South African time, usually on a Friday. So, and it only gets released once a month. So, how I made this trade is I made it on looking at the 15-minute chart, but you first have to look at the direction of the trend on the the 4-hourly chart or the hourly chart, just to see what is happening in the market. So, what we can see here is that we are currently in a massive downtrend. So, a downtrend is defined by, if we go and look at Dow theory, it's defined by a series of lower lows and lower highs. So we have a lower high, a lower low, a lower high, a lower low. And we ran into some consolidation, as you can see. For some of the experienced traders here, we have equal lows and we have highs that are descending. And that is kind of a pennant flag. It's one of the things you'll study when you do some more research in the Forex markets. And then we saw a very convincing break out of that, so the downtrend continued. Anyway, we ran into some more consolidation here, and then the downtrend continued. Lower low, lower high, lower low. Anyway, okay, so then I switched down to the 15-minute time frame to actually make my entry. So it's very important that you guys use multi-time frame analysis so that you can see what the bias of the market is. You don't want to ever trade against a trend. So 95% of Forex traders lose money, and that is because the education out there is absolutely terrible. You get told to try and trade reversals or swings, and it just doesn't work. I don't understand why people try this. It's clear that even when you open a Forex account, there's a warning that most people lose money, and you wonder what the reason is. So I also made this channel because the problem I have, especially in South Africa, is with the education we have here. The people are just terrible. I can't understand the traders in this country. Guys like Forex Broker Killer, who charge you guys $2,000 for a course, and he teaches you absolutely nothing. He teaches you how to blow your account. So, and you wonder, why does he have the cars, the houses? Because it's simple. If he sells 1,000 courses, which is done more than 1,000, obviously 1,000 courses for 2,000 rand a course equals 2 million rand. 10,000 courses, 2,000 rand a course, 20 million rand. So he might not be a good Forex trader, but he's a brilliant salesman. So yeah, that's basically us, and the rest of the South African Forex industry is the exact same. I don't know one trader on YouTube in South Africa who actually knows what he's doing. Anyway, so coming into non-farm payroll, we saw that there was a bunch of there was a lot of bottoms down here, so we know the market's eventually going to come back to this point. But the market started pushing upwards, and coming into non-farm payroll, this is kind of, it's weird. Why would the market all of a sudden from a downtrend just reverse and start coming up? Okay, so the market came up, 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 and then it respected the trend line. Okay, that's normal. And by respecting the trend line, came back down and it tested the trend line again. Okay, that's when I decided to enter, because the trend line also lined up perfectly this point here with the 61.8 Fibonacci level. Anyway, so when it came back to test the trend line again, I opened a short position, waited for the news to come out, and the news pushed the market down, and I got out over here before the market reversed to carry on, because as soon as the news came out, everybody started selling because the market was dropping. And one thing you must understand is that these markets are controlled by banks. There are 5 major banks. I think it's Deutsche Bank, Citigroup, and these people, Citibank, sorry, and these people determine where the Forex markets are going. You would think it's economics, you would think it's fundamentals, but no, it's none of that. What it is banks. They decide what happens, and you must follow them. You must follow the smart money. It doesn't help you try and trade reversals or all these strategies that people sell you, the courses that never work. Like, if you think about it, why would somebody who's a professional Forex trader sell you a course? Why would he need money from you? That's why. If he's a Forex trader, he can make as much money as he wants to. He doesn't need to sell you a course. So anyway, we know there was a lot of liquidity here, and we know that the market's going to reverse to come and get this liquidity. That's just simple. So I got out as soon as I saw signs of reversal, as you can see here. I got out of the trade. It wasn't a lot. I think it was 15 pips, 16 pips. That's all that you need. So it was a small trade, but I mean, it got me there. The second, it's a small account, so it doesn't really matter. Secondly, the second trade that I took was on GBP USD. So if we look at the 4-hour chart, you will see that we are currently in a beautiful uptrend. And if we go back to the 1 hour, we saw here a break of structure, because what we have is the whole time we have higher highs, lower high, higher high, lower high, failed to make a higher high. So this is a break of structure. Okay, so it came back, and what do you see here? We see equal lows. And as a retail trader, what these courses teach you is that when you see equal lows, you should buy. And obviously, so this would have worked out up to extent for you. Would have came up to this point, reversed, and yeah, what happens to these equal lows? The market just blows straight through them and then immediately reverses. So there were a lot of people buying over here, thinking the market would stop and reverse at this point. Yet again, reversal traders not doing too well there, as per usual. Anyways, so we got a nice reversal over here. Well, not a reversal, but I mean a liquidity grab, and then the market reversed from that. So taking the stop losses of these traders who had stop losses below this level. Anyway, so now the market reversed, and what would you think was going to happen if a bank or an institution pushed the market down here by selling? They would have to come back to this point before carrying the market higher. So this position where they sold is in a loss all the way up here. And so all that you do is you look at the open of the candle, because that's where they initiated their selling, or the 50%. Depends on how aggressive you are when you're trading. So if you are more risk off, you would take it at the 50%. But if you can tolerate risk more, you would put your buy limit at the open. So less risk at the 50%, more risk at the open of this candle. Okay, so I put a buy limit at the open because I'm trying to get this account to $15,000 or $20,000 in a few months. So obviously that's gonna be like what, 15,000%, 15,000% gain. So I can't do that by not taking risk. So as we can see, the market's carrying on, and then boom, there's our entry, as you can see by the line. Here I entered. I had my buy limit over here. And the market came down. It didn't quite reach, I don't think it reached the 50%. No, it didn't reach the 50%. So if you weren't so keen to take risk, you wouldn't have gotten into this trade. But I mean, these opportunities present themselves every day. Remember, you have 25 different currency pairs you can trade, and this happens in every single currency pair. So every day you should have a trade. And remember, trade less but make more money. You don't have to be in the markets 24/7. Go do other things. Wait for the opportunities to present themselves. Don't chase the market. So what I did here is to see where the 50% is. I'm just going to delete all this stuff. So to see where the 50% is, you would use a Fibonacci retracement. So just take the fib from the bottom of the candle to the top, and then just there's your 50%, and then you could just insert a line on the 50%. There we go. So yeah, that's basically how you determine the 50% of a candle. Anyway, so my trade triggered. I was in a little bit of drawdown, and I got out over there with a about 30 pip profit. And the thing is, I got out before I normally would. Normally what you would do is you would target the previous highs. As you can see, we have equal highs here. What do equal highs mean? It's liquidity. So obviously the bank's going to come back to those points and take this liquidity. It's just how they operate. But I got out of the trade, unfortunately, because I took it last night, and as we know, the market's closed at I think 10:30 South African time on a Friday. And if the market gapped in the wrong direction, so if it gapped downwards, because the account is so small, I don't want to risk blowing the account. So that's the reason I got out of the trade. But nevertheless, we are currently, as you can see, at $220. Where's my journal? No, not journal. History. So we can see we are currently profit at $120. So not a bad start to the challenge. We've made 120%. And yeah, I'll keep you guys updated, probably with weekly videos. And thank you for watching. I appreciate it.